What's going on, everybody? 360 Digital Closing Bell here. I am your humble correspondent, Michael Tanner, joined as always by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, Oil and Gas 360.com, Stuart Turley. How you doing this morning?
It's beautiful. It is a Monday, and we are busy in the neighborhood.
We continue to get busier. It's unbelievable. We appreciate you checking in with us for a week ahead podcast, episode number 36 here on this gorgeous Monday, July 27th. We're actually banging this out in the morning here. It's about 6:45. Oil currently trading in the overnight session, 41.60. So actually had a decent day right now. We'll see that pit opens about 7:30, so we'll probably have it finished up by then, but probably expecting a bullish day. I think we're going to see $42, $43. I think we're going to continue to see oil kind of chunk up here. I think some of this positive news is coming out. But as always, we kind of ride off the coronavirus stuff. We have a great show for you guys lined up. We're going to kind of dive into a really good article that our friends over at Rare Petro wrote, and really just some wild facts. There's a couple other things we want to cover. We'll check in with we'll check in with the levels for crude oil and the commitment of traders, some interesting stuff there. 360 official, non-official funds still suspended. We're working on it, but we continue to just get busier and busier. But first, guys, I need to tell you about my friends at Adamantine Energy and what they're doing for the energy sector, specifically in this idea of what's called social risk. And you might be asking, well, what is social risk? It seems like it's a weird concept. And honestly, Tisha's one of the few people who actually uses the term. I saw it used once. I saw someone else use it on LinkedIn a week. I was like, oh, I know where you stole that from, because this is really something that they've worked hard to develop, this idea of future-proofing against social risk. It's not just community opposition to all of these development projects. It's really everything. The success from the divest from fossil fuels movement, investor engagement around your ESG programs, individual states setting these wildly ambitious climate and decarbonization initiatives. To be honest, when you encapsulate it like that, social risk seems like it's everywhere, moving fast and multiplying like zombies. And that's why your company really needs a strategic partner like Adamantine Energy, because they're the leading consultancy. They're helping oil and gas companies prepare for all of this social risk. They're led by Tisha Schuler, who's the former CEO of the Colorado Oil and Gas Association, and she helps guide energy companies just like yours. And if you're an executive, to explore your exposure. That's a tongue twister. I get so deep, I get really good about this read, and then boom, I mess it up and explore to exposure. I'm not that good, guys. I wasn't necessary. I'm not a wordsmith, guys. I hated English, actually. I worked really hard to avoid English at all costs when I was in high school. And I went to a college where you didn't have to take it. It was great. So it's been great. Explore, but guys, please check out Tisha Schuler and Adamantine Energy. Help explore your exposure to social risk. She's also the host of the Energy Thinks podcast by Tisha Schuler, which is probably the best social. I mean, it's a niche market, to be square with you. It's a niche market. Not everyone's interested in energy thought leadership, specifically when it comes to social risk. But if you're an executive in this industry who's interested in, okay, well, how do I navigate and how do I set myself and specifically my company up for success as we move through not just post-pandemic, but into this new world of everything's ESG. If you listen to the show at all, we pound this day after day after day. ESG is the only place where capital is going to be. Well, she's probably somebody you want to get in contact with if you're interested in doing anything. So guys, check them out. The Energy Thinks podcast on Apple, Spotify, iTunes, anywhere you get your podcast. You can also check out her Both Things Are True weekly newsletter, all available at www.energythinks.com. She's thinking, so you don't have to. This show is you should also subscribe to this show, the 360 Digital Closing Bell, iTunes, Spotify, YouTube, the best place for all of your energy market stuff, guys. We come live every day on YouTube. We'll be live at 2 p.m. Mountain Standard Time, bringing you the daily happenings. It should be a wild trading day, specifically when this pit opens here at 7:30. You should also check out and follow Entercom and Oil and Gas 360 on all of the major social platforms. You should follow the Energy 360 News Desk. You should connect with me and Stu on LinkedIn. You should also check out the Energy 360 podcast, which is a podcast that Stu runs, which is the Energy Thought. I mean, this is even more of a broader, the Energy Thought Leadership podcast, guys. He brings on people from all over the wide range of the industry, specific in the energy market. It's not just specifically oil and gas. It's specifically the one we did that dropped last week with Aurora Energy Services. Find it, Apple, Spotify, iTunes, wherever you get your podcast. Stu, what do you have coming up this week?
We have two from Inveris, and we also have one from Intercom. And John, he
Yes.
is a well-known, kind of like our other authors, but he's a YouTube with lots of YouTube followers. So got a pretty good stack week.
We got a YouTuber. Does he say smash that like button?
No, he's more of a ex-teacher, knowledgeable kind of guy. He doesn't get up and around like you do.
Yeah, not much people have my energy. Well, I'm about 3 coffee cups. I'm about 3 mugs deep this morning, so we're flying. I really think that's enough clerical work, guys. It's we've got a lot of stuff going on here, guys. Just follow us, the world's greatest website, oilandgas360.com. No hyperbole. I know you might think I'm joking. I'm not. I am not. I type an O on my keyboard now, and Oil and Gas 360 pops up. It's pretty nice. It's that's the Google knowing knowing exactly where I'm going. But I want to. Stu we ran this story. What day did this story drop? Was this a Thursday, Friday? Let me look at it. This was a 24th. They ran this on a Friday. They don't know how to do this. We got to talk with them about that. Who's running a story like this on a Friday? Sidebar before we get into it.
This is too good of an article.
Yeah, you run this on a Monday or a Tuesday. I don't even know much about this industry, and I know you run this on a Monday or a Tuesday.
Yeah, you try. All of the bankruptcies and financials are being run at midnight.
Yeah, why do you think Rose Hill announced last night? I mean, we'll get into that. Of course, there's stuff in this with the Newswire. Everyone's off to go to their lake house in the Lake Ozarks, and now we're dropping this. Not great, but sorry, we guys get off kilter here. This story dropped on Oil and Gas 360 Friday. Did it actually run on their website on Friday? That's the real question before we actually dive into this. I want to make sure.
Yeah,
Periodicals, we'll take a look before we get into what's going on, guys. I'm sorry. This ran on the 22nd, so I'll cut them some slack. They ran this on a Wednesday. We just picked it up on a Friday. So we take most of that back, and everyone's probably confused. This story ran on Oil and Gas 360 on Friday, but it ran on our friends Rare Petro, www.rarepetro.com, on Wednesday, really talking about oil profitability around the world. And these are some of the part of the great periodicals that Kevin Olson over there is doing, really covering, really is a wide spectrum of stuff. We had Anthony McNeil's on the podcast. Oh, really early on. We're talking maybe episode 4 or 5. Stu's cranked out about 50 of them. And he was probably 4 or 5. Really, really good interview. Highly recommend checking out. But they've been running a lot of different stuff. One was on global oil demand right when kind of the trough of all of this COVID stuff. They were a really, really global, really, really good global demand article. They also wrote some really, really good stuff on price differentials. So if you're interested in and this is always what fascinates me is, not every, we all think every barrel of oil is created equal. It's not. There's differentials and, there's a benchmark, as we all know. And then are you above or below that benchmark? And you either get a premium for being above or you had to pay for being below. And it's really a concept of location. And so, if you're in Saudi Arabia, you kind of just got lucky. You just got lucky. There's that much there and it's cheap. And that's not to say anything bad, but that's just sort of how the game works when it comes to, whether or not you're a premium or I'm a benchmark or even below. So that being said, their latest articles about oil profitability around the world and specifically diving into and specifically splitting it up into 2 different buckets, because that's where I think is the key. And so basically his article talks about, producing, basically the actual cost to produce a barrel and how it varies throughout the world and how it impacts these determinations on all the global benchmark prices. And what he does is he talks about break-even prices. And there's really 2 types of break-even prices that he talks about. One is just the cost to produce a barrel of oil, which is all of what we think. And he kind of breaks that into a subcategory. CapEx, OpEx, makes sense. G&A, transportation. Mainly the 4, because you can pretty much anything that's not in CapEx, OpEx, or transportation. Trust me, I took petroleum economics. You just loop it in with G&A. It's pretty easy. So you've got your 4 main benchmarks there. But the other sort of break-even price that I think, we've mentioned it a couple times on the show, but I don't think it's brought up enough, is when we look internationally, the cost to balance government revenues, or what we would call the fiscal break-even price of oil, which is basically what does a country like, let's give an example, Bahrain, because they're on this list. Bahrain has spent so much money, they've taken out so much debt, they have so much interest payments that they need oil at a certain level, considering it is their biggest revenue source. That's what's funny. In America, it's taxes. Now, we don't have national oil companies, but it's kind of crazy that, some of these countries, their taxes, they're and large parts, like we're talking 60, 70, 80% of these government's revenue comes from strictly oil, which is wild to think about, which is why when times are good, they can take out massive loans. And it's when in times are bad right now, you look at the fiscal break-even price of oil. Stu, we're just going to run down this list, okay? Number one, we're going to run top to bottom, okay? Because I think this is, and these are the top 13 most expensive fiscal break-even oil prices in 2020. Courtesy of who? Who is this? They do a really good job of sourcing this stuff. I don't even know what this is. I can't even pronounce the name of this place. Kohamane. I don't know. This is interesting. Kohamane.com. KNOEMA.com/infographics. Interesting. I trust this. I don't think they're lying to us. Point is, that's the source. You can go in the article and you can take a look at this. Number 13, Qatar, $47. Not bad. You can make money, or $45, excuse me. You can make money right now. Not bad, not bad, not bad. 12, Azerbaijan, 53. 11, Kuwait, 54. Turkmenistan, I don't even know how to pronounce it. Turkmenistan, 57. Yep. Kazakhstan, 57. Iraq, 60. UAE, 70. Oh, we're start getting expensive now, Stu. Saudi Arabia, oh, there's so much cheap oil. $83 fiscal break-even price. Oman, $87. Side note, my cousin has been trying to, my dad was born in Africa, and I have a lot of cousins that live over in like the east side of Africa. I have had a cousin trying to get me to go to Oman with her for years. I'm like, I'm not trying to die. Okay, like I would like to come back and not get stranded there on some camel with you in the desert. 4, Bahrain, $91. Woohoo! That's why I kind of brought him up. Number 3, Libya. Why would you want to live in Libya right now? Because it's $99 to balance government revenues, and yikes. Algeria, number 2, $109. And get this, our friends over in Iran, $194 fiscal break-even price. Yeah, you're screwed either way, Iran.
Well, Iran, we've been talking about this, but they've been selling the oil outside of sanctions to get cash flow. They have been selling to China and others at ridiculously low prices.
That's exactly what I was going to say. And they can't be selling market rate.
No. And so when you take a look at all of these social programs where you and I have talked about a world economy coming around the corner, you have all the influx of cash from COVID governments to go to renewables. I've been doing stories on Saudi, United Arab Emirates, all these others have social and renewable projects coming in, and they're all funded by credit card, if you would. I mean, they're all funded by COVID responses and all that. It's nasty when you sit here and consider that this is all either part of OPEC plus, or it's a disaster.
Well, it is a disaster. I just found it very interesting. I think the two biggest takeaways from that list is, well, one, number 6, Saudi Arabia, $83 to balance government revenues. And so I think people always talk about how they're very interested in bringing back market share to OPEC. And when you think of OPEC, you think of Saudi Arabia. They can't afford to have $20 oil. Like, they can't. They what they did in August, or what they did in early March, was a bluff. They can't sustain that. It's clear. They can't.
And the prince, I think you said, he came back and said ruh-roh.
Yeah, exactly. He did a little mind change, which is great. You're allowed to change your mind. You shouldn't be afraid. No one should be afraid to change your mind. If you take away one thing from this podcast, little life lesson for Michael, It's okay to change your mind. I do it all the time, and it's
You
fun
bet.
because then you're right most of the time because you can just be fluid and flexible with. I don't know. I don't know.
My wife changed her mind every 15, and you just get used to it. Now, um, where this is going also, and this one chart is so important because it lets you know that socialism is not good. And these are not totally socialist, but let's take Saudi Arabia. Saudi Arabia has almost everybody getting a paycheck from oil. They are
It's
dependent
got to be a
on,
good life, though. Imagine when times are good, though.
oh,
Imagine when times are
okay.
good.
The end population is still getting their paychecks, and the government is writing checks their body can't cash.
Mhm.
So I love that line out of Top Gun. Um, so this is an economic global world problem that everybody's doing. If one country was doing it. Now, the US, I believe, I need to go fact check this, but I believe that oil and gas is only 8% of the US GDP. I need to go fact check
Yes,
that.
it used to be as high as 20, and now it's down to under 10. You are correct. I don't know the exact numbers, but I know you're exactly correct. We have been, I mean, and it's clear because money has flowed in the equities markets out of energy into other things, and that's where the United States differs from places like, internationally where they don't really have a stock market in Oman.
No, but if you take an example of socialism and people being dependent on the government, this is good. Venezuela, perfect example. They used to be the richest per capita in the world, and now look at
Venezuela is
them.
sad. Speaking of socialism, I hear we're getting another $1,200 stimulus check. I hear we're cashing one more stimulus check this round. That's what
Yeah,
Muchin just dropped. I saw that drop across the ticker last night. I thought you'd enjoy that.
um,
We're gonna be paying for it. We don't have to get it. I just thought that was
okay.
the unemployment, and that's
Gestation.
something that's gonna, I think, impact the equities markets today specifically. Is, if they actually do another round of $1,200 checks, and the unemployment is going to be now not 600, but it's going to be $400 extra. It's only
Okay.
going to help the equities market. The number they're eyeing is about $1 trillion, Stu. Not to get us off topic.
Okay, we cannot sustain this in trillions. What's a few trillion between friends? Holy crap!
It really, it is.
Okay, okay. This is bad, and when you start putting pork all in the COVID. I don't care. I understand that. Let's go ahead and write some checks our body can't cash. I'm okay with that. Let's try to figure it out. This is a disaster. I'm understanding disaster. But why are we putting so much pork in there that we got to pay for people that can work their college education, get rid of their student debt? I'm sorry for getting political on that one. That one's stupid.
Yeah,
I'm
it's
sorry.
tough because I see both sides. I think
tell me your side.
My side is, I think that the majority of younger people, I think there's a higher percentage, and I don't think I know this. There's a higher percentage of people like the millennial age. A higher percentage of us are working in like what's called like the service industry, which is shut down. Like you have a huge the unemployment among millennials is 4 times the rate of that of the rest of the people, which is so. I'm not necessarily. So I see both sides because then I also have buddies who got laid off of the oil and gas business, got a severance, and now are getting unemployment, and it's like they're just chilling. So
what's wrong? What's wrong? And I'm just asking. Just
you're
asking.
good.
What's wrong with deferring payments but leaving them on the hook? Because I had to work all my way through college, and everybody in my generation, I got out of college because.
Oh, we're talking about specifically student loans. Well, student loans, I think, that's a whole nother argument. Those are a scam in and of itself.
Thank you. And Anyway, this is not oil and gas. This is social, and it goes back to our socialism on oil. So this is a whole nother rant. But
Off
all of
topic
this,
quick, but no, I agree with you.
all of this is tied to world economic depression or
You're big
recession.
on this. We didn't mean to get. I
I'm
was actively trying to avoid this when we started the show, but you're in a depressed mood. You think this is
I'm in a factual mood. There
okay?
is a difference. Um, I don't understand why everybody is going through this. Um, let's take energy. Let's get energy to the poorest of the poor. My wonderful opinions of the Indian government are trying to do that. Let's get energy at the lowest kilowatt per hour. The other one that we were going to talk about, which you tell me when you want to, is the high kilowatt per hour that New York's doing. But this is up to you whenever you want to.
No. You're just. I wanted to dive. I guess I was diving in more to. You're big on. There's a global recession / depression coming.
Yes.
What are you seeing? What tea leaves are you reading? I'm interested because clearly we're in a pullback because of COVID.
Well, what you're seeing is there is now more international disputes over natural gas than there ever has been before. And the reason for that is because a couple of years ago, when Putin turned off the taps, everybody has two things. Renewable energy and natural gas has been accepted as we're carbon friendly by going to natural gas. So natural gas is almost accepted as being green. So when you take a look at the number of disputes over natural gas and the volume of everybody trying to get energy is in natural gas, but they're spending more in renewables and they're getting on the hook with China. They're coming in, and Warren Buffett said 5 years ago, I believe, I'll have to fact check that, the only reason to put in renewable wind is because of tax credits. Let's back it up to tax credits. How are you going to get tax credits in a recession or depression? I'm sorry for being this way. I hope I'm wrong.
No, I get it. I get it. I hope you're wrong too, because that doesn't paint a very glossy picture. But yeah, no, because when you dive into more of this, specifically of a global person, you dive into more of this article. The big number that shocked me was at current levels of WTI hovering about $40 a barrel. There's only about 55% of global oil that can be produced below that at a break-even price.
That is critical. Holy cow!
Because that's, we're talking all these international. If what you're telling me is true, all of these international companies, they make their money off oil. Well, that's not good then. That's 45% unprofitability. As an investor, I flee. I run. I'm getting out of the studio.
Run away! Out of Monty Python. Hey, in our interview 2 weeks ago with Heidi and Terry, I love the line when he said, iPhones don't grow on trees, they come up from the ground. And think about it. If oil is not being profitable, we are losing the ability to have our wonderful oil and gas people bring oil products in. Oil and natural gas make the world go around to manufacture all products. It is a fact.
It's true. It's 100% true.
You ain't gonna have your iPhone if you ain't got oil. So
no, I feel that. I actually just got a new iPhone today, or like last week. It's unbelievably huge. It's like an iPad. It's like the iPhone 11 Pro. Woohoo! Not what I needed. You can't go into the store because of COVID. So I just walked in, was like, I need a new phone. My phone's dropping calls. I go, okay, which one do you want? I was like, I don't know, just give me the newest iPhone. Walks out with this iPad, and I was like, ooh.
Kevin's conclusion is phenomenal. The young man did a great job writing this
Now, what's his
article.
conclusion? We got to wrap this up. We've been off topic for a while.
Sorry, don't let me rant. I will go put myself in the corner after
I love
this.
it. We need to hear from you more often like this.
I'm just going to read you this paragraph because he did a great job. Short paragraph. While the current price level ensures about 55% of existing global production can still be profitable, it is not sustainable as demand continues to grow. The cost to produce a barrel of oil does not account for the exploration of new areas. Horizontal wells decline from peak production shortly after they are brought online, meaning natural decline will cause global supply to fall if reserves are not replaced through drilling. As a result, there will not be enough oil produced to keep up with global demand. Additionally, fields can only support a number of limited wells before reservoirs eventually is depleted and new areas must be developed. All of this feeds right on into economics around oil. Well said.
No, I highly recommend just reading the article. They break down production allocation costs. I mean, it's some good stuff. I highly recommend checking it out. You find it on the Oil and Gas 360 website or www.rarepetro.com. That's a free shout out right there.
There's some real nuggets in this article. And if you're thinking about the whole worldwide picture, this was very well summarized.
Mm-hmm. I couldn't agree more. Anything else, Stu? You're on a good vet pat. Anything else you need to get off your chest about this topic before we move on?
Renewables or what?
No, we're talking about just global oil demand, global oil depression. I think we need to move on now to the things to watch for this. I just want to make sure you're not got anything else bottled up we need to get out.
Okay, good news. I like.
Yes, let's end with some good news.
Okay, let's get some positive. You know, that little tiny deal that just happened with Chevron. I found a little article from Cyprus. Cyprus is really needing that natural gas from the Leviathan field. And now they're worried that Chevron may take their time trying to really figure out the play on that Leviathan field and trying to figure out the disputes. Okay. So it's really cool because there's so many countries and small countries that will benefit from the natural gas in this purchase of Chevron. Well done.
No, I think it's indicative that the deals you're going to see are going to be focused on companies that acquire who are looking to purchase are going to be looking for core assets that they can add on that are adjacent to what they already own. So you can kind of create some of those economics of scale. It's much cheaper for someone to pay a little more to buy wells that are right next to ones they already own because they have infrastructure set up. You go out and buy a field where you have nothing, and now you either have to buy the existing infrastructure on top of your wells or you have to go build it. So I think you're going to see core assets around where they already have existing wells. But I also think you're going to see natural gas. If they're going to go out and buy something new, they're going to go buy something that they've never done before. I think it'd be diversifying to something like natural gas. And that's odd to say. I mean, that's what people were saying in 2010. And look where that got a lot of these shale gas companies. I mean, it got Chesapeake 10 bills in debt and a Chapter 11 rebrand. So I know that's what everyone's saying right now. But I don't know. Put me on the spot. I think that's what you're going to see. Whether that's right or wrong, I don't actually know yet. Those are people. I mean, that's why I'm not the CEO of an oil company. I don't have to make that decision. We'll leave that up to somebody smarter.
This is cool from the point that Chevron may have kicked us off to some excellent M&A activity. And I think that's fantastic. Let's get a restructure on the oil industry. Let's get it rebooted, restarted, and rumble again. So I am happy to see this one.
Well, let's just go ahead and dive into the week that's upcoming here in oil and gas. As always, this segment is sponsored by Sandstone Capital Group. Guys, these just do insanely good research. They provide all of their levels from the Energy Glimpse solution. SandstoneCG.com. Call them 949-561-1818. Couple things to watch for, I think, in U.S. shale. Well, I guess, first two things happened over the weekend. One, Rose Hill Resources We love those guys over there. Unfortunately, finally made it official, filed Chapter 11 bankruptcy in the Southern Court of Texas. Some of the numbers: $436 million in total debt. They agreed to an aggregate principal of $17.5 million in what's called DIP financing, or what's called debtor in possessions, giving them about $17 million to kind of on go. What's very interesting is they're going to get $8 million this once the court, which hopefully today agrees to the Chapter 11 restructuring, they're going to get $8.5 million off the bat, or within 3 business days. And then once kind of the final the stuff rolls out, they will get the rest of that DIP financing, 8% on that. God, I love it. I was telling Stu before the show, we got to get into that business, the DIP financing business. But generally, and this is something you can get from the Haynes and Boone Weekly Energy Tracker. If you guys would like to sign up for that, email me, mtanner@enerconomy.com. But DIP financing generally comes from the people who you're already indebted to, because they don't necessarily like throwing some of this equity around.
You pointed this out earlier. Haynes and Boone is on the team.
Yeah, boys over at Haynes and Boone are on the team here. We love everybody involved with this. But so we probably can't get in the DIP financing game. But 8%, gotta love it. No wonder people throw out these like hotcakes. Another interesting thing: if you're a equity holder in Rose Hill, you're only chopping off about 2/3. Only about 66% of your portfolio gets cut. I mean, I've seen worse. Chesapeake, you got gone, all of it. So, the fact that you're only 66%, man, it's not terrible. So,
on Chesapeake, don't bring up our coworker, Dan. I mean, there's no reason to rub it in on Dan.
That all of his equity was wiped out, that he was given in stock. No, we wouldn't.
But don't bring that up.
No, I won't. Sorry. Apologize. Sorry. Yeah, I'll doubt he actually hears this. The other thing that kind of happened over the weekend: NRG acquired Direct Energy for $3.6 billion in cash. So big deal. As you know, NRG is one of the most diversified electrical and natural gas generation businesses, and this move expands their presence all 50 states, 6 Canadian provinces, adds more than 3 retail customers, 3 million new retail customers. According to the press release, it's going to help them match power generation capabilities with their customer demand. They're also going to getting more into the retail natural gas business as it expands its service to the East Coast, and will add retail customers on both the East Coast and Canada. They also say that the result will result in an ongoing run rate of $300 million in cost-saving synergies by 2023. Yeah. That's a nice. IR guy got paid a lot for that one. It expects to spend that's like telling me we're going to be. I read that number. When I read that, just so people know how my mind works. When I read NRG says, first off, okay, now we know who says. NRG says the acquisition will result in an ongoing run rate of $300 million in cost-saving synergies by 2023. What does that mean? Ongoing run rate? I don't know what that means. First off, that just seems confusing. Second off, that sounds very much like we're going to be carbon neutral by 2050. Sounds exactly like when I hear, Stu, we're going to be carbon neutral by 2050. That's what my new presidential platform is. Carbon neutral by 2027,000.
But if you're also on the platform, I heard someone who was in the political party saying we're going to be carbon neutral by 2035, but we only have 9 years and the world's going to be dead. So exactly. Why put that in the same press release?
So point is, are they going to be saving $300 million a year because of this? I don't know. It also expects to spend $220 million and will recoup the investment in the savings by the end of the second year. So there you go. NRG getting more into the natural gas business. What did I tell you guys? We're not making this stuff up when I think natural gas will be big in the M&A space. And who knows? This is electrical generation. So this will always be, this is a great purchase for NRG. You go out and buy a natural gas company that just produces natural gas, that's still going to be dicey in today's terms. Yes. But if you already own it, or you're going and getting more natural gas infrastructure, I am all for it. Stu, you had something on solar and wind we had to cover.
Not that I'm picking on Governor Cuomo, but he's like an opportunity waiting to happen. He just put out, announced the largest combined clean energy solicitation ever issued in the United States, seeking up to 4 gigawatts of renewable energy. This capacity is broken up into 2,500 megawatts offshore wind and 1,500 megawatts of onshore renewable energy projects. All I got to say is, as a taxpayer, I don't want to bail out New York. And the reason I don't want to bail out New York is he's shut down profitable low kilowatt for the people of New York, and he's putting in this. How's he going to pay for it except getting money from the feds? I'm not particularly happy with the way he's leading this.
No.
It is sad for the people in New York, and I don't want to pick up the bill. Sorry for that one, but like I
No, I
said,
agree. I mean, I saw some stat. You, let alone the federal government debt. If you include state debt, the U.S. is literally has more debt than, I think it's like 6 or 7 different worlds. It's unbelievable. It's unbelievable. Like if you add, it's just unbelievably much. So no, I agree. I mean, I think if you're trying to pour money right now into old school solar and wind, I'll say it, you're an idiot. Like you're just an idiot. Like it's not even renewable.
And there's no tax.
It just kills me.
Okay, the renewable. Okay, here's what I will say positively about renewables. I think that they all have a place in order to, because there are places that you cannot use anything else. I believe there is a place, and I just read an article over the weekend that there is 2 new technologies coming out, and that is, one of them is a new solar crystal that's coming out that will also heat
A solar crystal. Ooh.
Yeah, it sounds like some
Crystal.
Jim Henson Muppet movie. It is actually a heat producing crystal that will also generate electricity and heat water at the same time for cooking and other things. That is a game changer if it can get put into larger production. So technology will get there. I think it's something that we have to take a look at. The other one that we talked about was the natural gas pipelines allowing hydrogen in the same infrastructure at 20% on a natural gas line. That's huge.
Huge.
Absolutely huge. So anyway, good things out of renewables. I don't want people thinking we're just a bunch of morons.
We kind of are those. So it's okay. What do you have on the international news desk? You've got this Cyprus energy story, kind of a fallout from this Chevron stuff.
Yeah, we've already covered that, but what we are going to see, and I have a feeling this week may be fairly interesting on some of the stories, is just quite honestly some of the turf wars going on over there right now. Everybody's at a heated level of turf warring.
Yeah. I mean, because everybody wants natural gas around the world. That's what's hilarious. Everybody wants it.
Yep. And they don't want to have the controls that Putin had on them. NovaTech, last week we talked on the show that the first icebreaker out of the Arctic went through the Northwest Passage to Japan. First LNG coming out of the Arctic. That's huge. Japan has to buy LNG. Why can't Canada get their LNG facilities up and running faster to sell to Japan and make some money for our beloved Canadian neighbors?
No, I agree.
I don't want to go into it. We've taken too much time.
No, that's the beauty of podcasts, Stu. There's 0 time limit. We can continue to chat for as long as you want. I love it. I think you've done a great job not only covering the international news, but bringing a lot of these issues. I think it's interesting.
Sorry, thank you for letting me rant on your show. I know I.
Oh, you're good. I love this. This is good. So, but I do think it's time we gotta cover the levels for the week. I keep moving the floor up, Stu. It's really nice to see. Last week we were at 39.16. I'm going to chop that level off. We're going to move that floor up. 40.17 is kind of our low level currently. Oil's trading. It's about 7.21. So, we might see the pit open here in about 9 minutes. 41.10 right now. But kind of the levels as we move south to north, as I like to call it. 40.17 is going to be our floor. 40.48 is another good volume bench. 40.86 I like. 41.25, 41.51, and 41.87 are kind of the 4 or 5 levels I like if you're looking to get. I'm probably bullish specifically because our point of control is 41.87. So I'm probably bullish in terms of if we see 46.86 or 40.48, it's probably a good position to get in long. I think if you're looking to short this, when we look at price action right now, I don't know. Price action looks really good right now. It'll be very interesting to see what happens when the pit opens here. We're actually at a good reversal point off a pullback. So could be an interesting long spot here depending on what the sentiment is as the pit opens. It's the beauty of day trading and partly why it's just scary because you just don't know. Like I said, my bias for the week is bullish. I'm not necessarily going to completely go balls to the wall with that, but I do think we're going to see 42, 43 at some point. Whether it'll settle, if that will be very interesting. I think it'll be very. I think the point of control being at 41.87 bodes very well, specifically. But it'll be very interesting when the sentiment rolls out. Remember, we are one bad news story, and or one coronavirus lockdown away from. Seeing $7 oil. So, as much as hey, we're stable right now, 40, 45 bucks. We're on pins and needles right now, to be completely honest with you. And really, what's interesting is hedge funds see the opposite. They're longs, dude. They added 8,000 contracts. Now, this is Tuesday to Tuesday, so we're missing about 4 days. It'll be very interesting to see what happens next week. They added long contracts, which makes sense. I would expect from last Tuesday to the previous Tuesday here, there's more long contracts bought because we have been an overall price action bullish. Yeah, we're tanking right now. We're about to go below here. We're about to dive down to 40.86. Pitt don't like it, Stu. Sentiment don't like it. I wonder what drives. See, this is where having a news ticker up helps because now I'm just wondering what's diving. What's going on here? What are the levels saying?
On the 41, I need to check with some of our experts that we've had on as to the long-term play of 50 barrel, $55 barrel in order to get our wonderful people working again in the oil field. I wonder what that number is because $40 is not going to do it while we have such large supply still out there without the demand.
Speaking of our friends over at Rare Petro, the final sentence of his article that we just covered was a rational price to support economic production while appeasing global consumption moving forward is likely found at prices above $55 a barrel. So I think you're close. So and I'm not necessarily saying Kevin Olson's an oil expert, but he did the research. This is I trust that.
I threw that. I got my own opinions, but I'm glad I had his.
Hey, it's helpful, nice to agree. But yeah, guys, managed money added about 8,000 contracts on the long side. So hedge funds, specifically last week were, made some money off that. They dropped 2,000 contracts on the short side. Big thing is both swaps are getting hammered on the short side in a good way. And when I say things got hammered, I mean hammered out of the ballpark. 19,000 contracts added on the short side for swaps. So people are taking these prices and buying their insurance while they can, Stu. That's all I can say right now. They're taking $40 oil. Aegis has got to be busy over there. And because they're making outbound phone calls to their clients. Hey, you checking the prices? Here's the premiums. Let's hedge a little more. So they're busy. Their phone's off the hook over there. Another story I actually saw is this weekend, Mexico is engaging a couple select banks to put together quotes for their yearly hedging round. Would love to be a part of that. Those are really, really secret negotiations. If you're Mexico, you don't want A, you don't want that information getting out. B, if you're another bank who gets offered that to submit a quote, you don't want to know what your competitors are because the difference in pricing is unbelievable, Stu. Depending on, hey, if I'm going to offer you costless collars, I'm going to offer you this. It's a wild amount. It's wild. So now everybody at those companies, it's just like in every industry, you know what the other person's charging if you've been in the industry for any period of time. So they're all close, but it's highly secret negotiations. That was a Bloomberg article that ran this week. So we'll be keeping you updated on that. Who knows? I do know last year they went with Citibank, so they're definitely getting.
Michael, do you remember when we ran the OPEC meeting and on Zoom? Why don't we see if we can run this meeting and kind of like, be the host and sponsor of this meeting out of Mexico?
Yeah, might as well. Hey, Mexico, I'll help you hedge. You can call me up.
We'll
submit a great quote price.
We just need to be the auctioneers or.
Yeah, exactly. So, yeah, I think that's everything in oil this week, guys. I don't know if the themes this week. It's gonna be very interesting to see what oil does. I think we're going to continue to see more Chapter 11s, but I think you're going to see the M&A market continue to wake up a little bit, specifically on the natural gas side. We're over 45 minutes here, Susan. Anything else we need to cover? Guys, the 360 official, non-official fund still suspended. I know we keep saying we're going to get back to it, but keep being busy and busy. But I might be having a little more time coming up here soon, so hopefully we can secure some more time later this afternoon, or later this morning.
Thanks for letting me play in your sandbox, Michael. Appreciate it.
Of course. I love sharing. What do they say? Sharing is caring?
Yeah.
I appreciate it. Yeah. So, all right, guys. Well, with that, like I said, we're going to home let you get back to work. Thank you for checking out the 360 Digital Closing Bell here on the world's greatest podcast network, Oil and Gas 360. We will see you guys this afternoon for the digital ticker.